Once again, thank you very much for choosing Joy News. Now, a government delegation is in Washington, D.C. to participate in this year's International Monetary Fund annual spring meetings. The spring meetings bring together policymakers, business leaders, country analysts and opinion leaders from the U.S. and other countries, including Ghana, to talk issues regarding global economy. The meetings will also discuss Ghana's prospect for economic recovery, explore issues of governance and regional leadership, and examine the multiple strands on U.S. policy engagement. Let's get more on this from business editor George Yafe, who is part of the meetings for us. George joins us via Skype. George, what is the theme for this year's meeting? All right, so we don't have George Yafe on the line yet, but I have an economist with me, Courage Mate. He is with Data Bank Research. And Courage, this is not the first time we are having the IMF spring meeting. It happens yearly. What do you think? Do you think that the impact is really great on our economy based on what you've monitored so far?
Well, might not be that great because we have our peculiar domestic troubles and challenges that we have to correct, But essentially, the benefit that have always come with these meetings is that they tend to raise the red flags and give you the warning signals ahead of the occurrence of those risks or the risk crystallizing. And so, to that extent, if policy reacts as quickly as possible, then it helps to mitigate, forestall, or minimize the risk, the impact of the risk.
So, for instance, the last 2 years on and then last year, how would you say the impact was on our economy?
Well, last 2 years and last year, one of the main talking points was the low commodity prices and how we need to start consolidating our fiscal operations to ensure that the adverse impact on revenue does not continue to sustain the macroeconomic instability we have had to face because of that. And that went into the decision to actually go under an IMF program, and that supported fiscal operations until now. So given the fact that they had raised the red flag and the fact that the lower commodity prices will remain at that level for some time, then it means that fiscal operations must remain consistent with lower revenue projections, and it has helped so far in bringing down the fiscal risk, although not to the barest minimum we would expect.
What we are learning is that this year they are talking about the need for individual countries to put in measures to build strong economies. How do you think Ghana can fully take advantage of these meetings to, increase or improve its fortunes economically?
Okay, so one of the things that came out from even yesterday's press briefing is that the global economy is increasingly looking inward and adopting a protectionist strategy. You can talk of the US, you can talk of the Brexit and the negotiations that have started. You can talk of the fact that even elections in France are likely to lead to someone who is an anti-EU winning the elections, and that could lead to an even greater individualistic approach being taken. Now, when you attend these meetings, you get to, first of all, feel the mindsets of these leaders, what they are seeking to achieve with their countries and their economy, then explore strategies to take advantage of their new approach to doing things, given the protectionist approach that the global economy is now adopting. So when you go to such meetings, it gives you the opportunity to actually engage with foreign leaders and their policies, and then it also helps you when you come back home to adjust policies if necessary to be in line with the global perspectives.
One other thing that also comes up is you don't want a situation where representatives from the country go there to just listening into what is happening. Of course, we are aware that the vice president as well as the minister of finance are leading the delegation to the spring meeting as of now. But what measures do you think the country can put in place to sustain itself economically, which could be presented even at this meeting?
I'll tell you what, one thing I also found out is that from the latest reports that is about to be published, the Fiscal Monitor, they cited something very critical. That is the impact of taxation on private investment and productivity. And what they argued is that just by upgrading the tax system through administration and policies, we can actually stimulate business investment and economic growth. And they actually noted that in developed economies, when you upgrade the tax system, you can support growth by up to 1 percentage point. And in lower income countries, growth can actually increase by an additional 0.25%. And that falls well in line with the new government strategy of switching from taxation to production. So I think this is where the government being in that meeting will feel vindicated that we are switching policy away from taxation to supporting investment, production, and economic growth.
And I want to see clarity on this. You're talking about upgrading the tax system and the impact on the economy. If you say that, what exactly do you mean? Should we scrap taxes in a lot of places?
Absolutely not, because government needs revenue to sustain its operations, But in economic theory, there's what we call the Laffer curve. And the Laffer curve is an inverted U. And at the peak of the U, it tells you that that is the optimal point you can tax and maximize revenue. If you increase taxes further, your revenue will fall, partly because of tax evasion, partly because of the distortions it introduced into the market. So you need to scale back some of the taxes that are introducing the distortions, so that then you can maximize private sector investments and economic growth.
I'll come back to you, Mr. Mate. We have correspondent, business editor George Yafe on the line. He's also in Washington, D.C., monitoring the meeting for us. George, what is the theme for this year's meeting?
Most of these countries build resilience to avoid any shocks that would come in. So basically, that's what the meeting is looking at in terms of ensuring that we build real buffers to help grow our economies. And that is what is being centered around in terms of the meeting that is currently ongoing here in Washington, D.C.
And I know, George, that the meetings actually started yesterday. What has been discussed so far, apart from these resilient measures you talk about?
In terms of the real conferences that would start very soon, it's been more of the bilateral meetings. So, for instance, Ghana is here. What are some of the things that the Ghana delegation is looking at? The IMF program is a very critical one. Are we going to complete the program come April 2018, or we are going to extend it? We are currently under a program. Have we completed all the necessary benchmarks and targets for the release of funds under the fourth review? We have officials of the Bank of Ghana here. They are engaging the fund and also the government bit or the government side that is coming from the Ministry of Finance. They are also engaged in the World Bank. There have been several sessions that will be on Ghana that the officials are looking at. So all these meetings have started. Yesterday, there was the flagship report that was launched by the IMF, that is the Global Economic Outlook, where they forecasted a 5.8% growth rate for Ghana. Now, it's good you have courage in the studio there. When you look at minus oil, that is a little bit higher than what we forecasted. Plus oil, we're looking at a little over 6%. So it looks like in terms of oil growth, the fund is not that optimistic about things being that well for us. If you look at minus oil, it looks like then we're a little bit higher than that one. So that is good there.
So George, in
terms of end of year inflation.
Yes, George, before you continue, you talk about 5.8% growth. That's huge. Apart from oil, like you're saying, what other areas is the IMF looking at which has made it conclude that we're going to have this, huge growth in the economy?
We are expecting that production in some critical sectors would indeed pick up. So that is what we are looking at in terms of things getting very, very well. And also, it looks like in terms of the overall contribution of oil, might not be that huge as government has projected. So this is what they documented in their report, which is also out right now. But today, Beatrice, we'll all be looking forward to the Fiscal Monitor report, which will again give us an indication whether the government's debt management strategy is actually working in terms of reducing the public debt or not, because they are going to give us an outlook of our debt profile and whether indeed this whole concern about high risk of debt distress is getting worse or we are indeed improving.
And
so
indeed,
that is Sorry, Patrice.
No, go ahead, please.
So whether we are improving the situation in terms of public debt or things are going to get worse. And for some people, they will say that, and so what? Yes, of course, for most investors, they want to look at these reports and make a judgment whether government is doing the right thing or not. We are heavy on the international market, and therefore people want to look at this and say that, okay, government is doing very well, and therefore I'll bring in my capital. Or government is not doing very well, and therefore I'll back out of this economy. So for most people who might ask or see these meetings as a talk shop, no, we are under a fund program. And therefore, these projections and predictions about Ghana and how we are faring and how we are also going to convince these investors that their funds are safe is very, very critical. If you could cast your mind back, Beatrice, when recently there was concern about the fact that the previous administration spent about 7 billion Ghana cedis and it wasn't accounted for. You saw how these institutional investors in our bonds reacted by pulling out. And you saw what happened to our Ghana cedi. So it's more of might I do about everything. And the fact that we are now exposed to the international community, and whatever that we do, if we get it wrong, we can be punished heavily.
And indeed, one of the things you mentioned in this interview, George, is inflation. I'm wondering how the IMF thinks inflation could impact our economy positively or negatively, looking at the growth.
Well, it looks like the fund is very optimistic in terms of what policies the government has put in place to try and control inflation, because they have projected an end-of-year inflation of 10%. That's even far lower than what government is looking at. So it looks like they are quite optimistic in terms of those policies that government has put in place to try and control general price levels. And the Bank of Ghana looks like might be playing a significant role here in terms of all those monetary policy measures that they are instituting to try and check the amount of currency in circulation.
George, don't go off the line yet. We'll come back to you very shortly. I want to get your view on some of the things George just said. He talked about 5.8% in growth, a prediction from the IMF. That's quite huge. And then George talked about excluding oil, other areas the IMF thinks that we could pick up, you know, on in terms of growing. But for you, I know you've monitored the market. Which other areas do you think that, you know, looking at the circumstances right now, the country could be growing in to, you know, meet this prediction from the IMF?
I think agriculture is key. You know, and we've not done too well in agriculture over the last couple of years, but we see that aggressive stance on the part of this government to resuscitate the agricultural sector. And you've seen recently they said they slashed fertilizer prices by 50%, and they are working a lot on improving irrigation. When we get to the period where there are no rains, you know, they are looking at improving on the cocoa yields in the cocoa sector. And then they will also be looking at the livestock subsector of the agri sector. So I think the agri sector holds a lot of promise, particularly in the area of the annual crops, which we haven't done quite well, you know, especially as the food stock is concerned. So basically, I see agriculture as one of the key drivers of growth for 2017 and beyond. And
earlier in your submission, you also mentioned taxes and how the financial leaders thought that, you know, dealing with the tax system could also help. Do you foresee that this could also contribute to the growth?
Absolutely. I see that a lot, because, for instance, if you have a situation where you have a VAT on fee-based financial services, and because of that, I don't want to be charged that VAT, so I keep my money in the house. The bank doesn't get that money to lend to Beatrice, who would use it to expand her business and employ more hands and generate more income. So growth is curtailed. But if that tax is taken off, then I take my money back to the bank. The bank then channel it to Beatrice, who use it productively, and then the economy is better off.
There are times that, you know, government repeats mistakes, which prevents them from seeing the kind of growth and even fulfilling the predictions that are made. Over the years, would you say that we have learned anything at all from previous mistakes and implemented anything to ensure that we put ourselves in a better stand when it comes to building resilient economies?
Unfortunately, I would say I don't think we've learned, especially as we get towards the elections. We tend to lose it, you know, when we get to the elections. I think it's also because we have a system that does not constrain the politicians from spending to undermine economic growth, you know. So going forward, when you have a system where the public financial management system is working effectively to constrain the politicians, I think that should anchor fiscal policy in a direction that can sustain investor confidence and economic growth.
But in this case, during last year's elections, for instance, because of the IMF program we had, there were some restrictions on spending during the election.
But we also missed our target. We were expecting 5.3% fiscal deficit, but we did 8.7. Granted, there were revenue shortfalls that were beyond the control of the managers of the economy, but there were also expenditure overruns, you know, and some of them were on the blind side of the public financial management system, which I thought that would have been done better, you know. So if you have these systems in place to check the managers of the economy and those who manage the economy, especially during the times of elections, then that should be the driver in anchoring fiscal policy.
Let me bring in George right now. And George, one thing that people are also looking forward to, apart from the things you've spoken about, is what kind of expectations that we have, even as these meetings go on. You have any ideas on that?
Well, expectations, interesting. But I believe that for most people, they'll be looking at what are the tangibles that we might be taken out of this program when it ends. And key because it's about whether we would extend our program or not, because that's been the sticking issue here in Washington, D.C., even engaging the IMF, that for a lot of these investors who are confident about things improving, some will say they are convinced they brought in their capital because they know that the big brother is there to check us. And therefore, many people are looking forward to whether we will extend the program or not, because the argument is that we may not be able to implement all those critical benchmarks and reforms by April 2018. And therefore, extending it to December might be the right thing to do. Don't forget, there's several engagements going on. And interestingly, we have the chairman of the economic management team being part of this whole discussion. And the fact that that is the vice president, Dr. Muhammadu Bawumia, here in this meeting. They are going to engage investors. They're going to engage several government partners here to try and convince them that they mean business when it comes to stabilizing the economy. And therefore, for some people, what will be the tangibles that we want to look at getting out of this meeting? And whether it was worth coming here or be another talk show. For many people, because Ghana is under a fund program, it is very, very critical. And therefore, let's look forward to see what would happen at the end of the day, Beatrice.
Indeed, George, and I was coming to that very briefly. I know that some members of the team were in the UK, for instance, yesterday negotiating with investors, for instance. Did you get wind of how the meeting went, whether there was some positive response from them?
Well, what I have picked up is that it was quite smooth, and that's what people will call the non-deal roadshow. When anybody hears non-deal roadshow, the argument is that, well, when are we going to issue the Eurobond? Therefore, that's what everybody's asking. But for this administration, their argument is that they want to engage these institutional investors. One of them is Franklin Templeton, which has really come an issue here in Ghana and there in the US. In one of their trips, they will be engaging officials of this institutional investors that have been very, very heavy in Ghana's bonds. And anybody who knows Franklin Templeton knows that they've been one of our biggest institutional investors out of the country over the years. They've been committed to us. They've been buying our bonds, our city bonds and Euro bonds and all those things. And for these investors, they want to touch base with this economic management team and ask questions about the budget and see whether they are indeed committed to stabilizing the economy and also checking expenditure. So this meeting, as we understand, or I understand, has been quite fruitful. And some of the senior officials, the vice president, the finance minister, if they have not already touched down, are actually zooming into town this morning to go into those several meetings in the US, engage the rating agencies. And don't forget, our ratings haven't been that good, Beatrice. And therefore, you might call it that they are using this engagement to more of using a stone, one stone, to kill maybe about 5 birds, if I might say.
All right, we'll end it here, and we'll definitely come back to you, George, to give us more information on the spring meeting of the IMF going on currently in Washington, D.C. Thank you very much. Let me come back to Courage Mate, who is an economist with Data Bank. Courage, any recommendations?
Well, I think this is an opportunity for the government to meet face-to-face with the international community and lay bare their promises and their commitments to restoring macroeconomic stability and a rebounding economic growth. So I think that the government must seize this opportunity very well. You don't necessarily have to strike a deal to issue a bond or a euro bond. All you need to do is just convince them on the prospects. These are what you are doing, and these are the upside and the downside risks, but this is what you have, the mitigating measures you've put in place to contain them. And I think that that should start, building up the investor confidence in the economy.
Thank you very much, Courage Mate. He is an economist with Data Bank.